We'll be looking out for the latest U.S. inflation figures, and of course the Fed, when they decide on July 12th, they're going to find out if the Fed needs to raise rates again or get inflation under control. But they may have time to reconsider its traditional 2% inflation target that's been controversial. Owen Fairclough explains.
It's a magic number for many of the world's major central banks.
2% in the medium term.
2%.
2%. Down to 2%.
They aim to keep inflation at or around 2%. But the US Federal Reserve was among central banks that lost control of inflation when the COVID-19 recovery contributed to rampant price rises. Core inflation topped 9% in the US and more than 11% in the UK and the European Union. In 1979, farmers from across the United States besieged Washington, D.C. in their tractors to protest, among other things, inflation that topped 11% by the end of that year. And by 1980, it was nearly 14%, way higher than it's been in this current inflation crisis. And back then, the Fed didn't have an explicit inflation target. In 2012, the Fed adopted 2% inflation as a mandated target, following an international trend that considered this number optimal for price stability. Essentially, a gradual increase most people don't notice. When inflation surged again after the pandemic, the Fed aggressively raised the benchmark interest rate that influences the cost of credit to try to bring price rises back to its 2% target. But with inflation now down to around 4%, some suggest the Fed could let it run higher by ending its interest rate rises and spare the economy the risk of a recession.
Would it be okay for you for a prolonged period of 3% inflation and hoping for some outside event to move down to 2% target?
We're not looking to get to 3% and then drop our tools. We have a goal of getting to 2%. We think it's going to take some time. We don't think it'll be a smooth process.
And yet letting inflation run higher has its own dangers. Namely, that inflation could run out of control again. And even letting inflation run at 3% instead of 2% can mean a higher cost of living for many people. And yet the Fed is intent on sticking to this 2% inflation target because so far the US economy has proved fairly resilient in the face of its aggressive interest rate hikes, confounding many expectations. Owen Fairclough, CGTN, Washington.